I'm not using the microphone, but I think it helps being heard.
Can you say the presentation?
Yeah.
Can you see?
Scrolling? Oh. Yeah, alright.
This one?
Yeah. Perfect. Great, it's like blank backdrop, right? Any way to maybe even block data further?
Okay. Google machen mal.
Yeah. Alright, thanks for sitting around and for listening to my presentation. I'm Mario. I'm co-founder and board member at One Trading. One Trading being the first fully regulated perpetual futures trading venue on a crypto asset collateralized setup in Europe. I'm not going to talk too much about One Trading though. Everybody that knows me knows that if you're listening to a presentation of mine, basically you're going to get the full bar reporting done, whatever's going on in my head right now. Some observations about the regs, some observations about the market, and really want to enable a discussion with you. And hopefully my speakers before Ali Reza and then have already neatly set the stage for what I'm about to tell you, and I really want to foster that discussion between us also in an elevated stage. Right, this is not working though. Is there another device? Do you know that? Okay. Cool. Yeah, so I'm scrolling. Crypto and TradFi, the age-old economy, a bit worn out by now. Where are we really going? What does regulatory development right now mean for the players in the industry? I think the narrative is really very broadly one where the US is now conquering the world as the crypto capital. There's a lot of media coverage about the Genius Act and the proliferation of American banks with new relaxed rules on lending and collateralization. After the EU having had its moment in the press, I think in the last couple of years with MiCAR on the horizon. I think, when we're looking at what does it actually mean for a lot of the players, we have to differentiate the headline from the story. Because what we're seeing in the US is really that the adoption of crypto assets there and the way in which it is promoted by the Trump presidency is, in effect, you might argue counter-identical to the origins of crypto, and is rather being used as a means for asserting fiscal dominance, right? So you've probably heard that. But what I mean by that is that you're seeing really a unique unique development in the US where big banks are really being placed by the political landscape to usurp market share. I think we're going to see a lot of fiscal, we're going to see a lot of consolidation as well in the US coming from the banks entering the crypto sector in a way that, yes, as Georg said, you're not going to differentiate banks from crypto asset players anymore, but that's not because crypto asset service providers have really taken over market share and have really acquired substantial market share in the next 5 years or so. This is fiat primacy. I'm a bit ashamed of this very crude sort of geographical coloring here, but this contrasts to some degree with a lot of the rest of the world, which in effect have always had banks which, when underwriting credit, were operating on a de facto gold standard, namely the gold standard of foreign currency lending. Now, when you're looking at those jurisdictions here, the thesis of crypto assets being or presenting a system which can live without credit, and which is really detached from the credit aspect, which really sort of is really all about instantaneous availability of assets and settlement. This is much closer to how banks have been doing business all along. And here is where I think we'll see that the integration between banking models and traditional intermediaries that have been, could be backed to the asset managers and crypto asset service providers is really driven by crypto assets uptake, and where I think crypto asset service provision can become a bit of a flywheel for modern finance. So where does it leave all of the rest that that could be jurisdictions like the European Union or the UK? Well, in those jurisdictions, well, we don't know, there's a lot of magic going on here right now. I think my thesis for the purpose of this presentation today is that this is really where the magic happens, that this is where partnerships now, if you're promoting them in the right way, can really set the scene, can really promote crypto asset uptake in a way that is sustainable and that can position players in the right way to profit, benefit from further mobilization of assets by meaning more assets aside from your traditional crypto assets as we would define them under MiCAR, being moved on distributed ledger technology, being mobilized, being available for 24/7 instant settlement. Right, so in the EU, we have seen, I think, we're seeing that there's a bit of an inflection point even with MiCAR, because what MiCAR has done is really has opened up service provision for a lot of players for whom before that providing asset management services or providing banking services and providing crypto asset services were two really very hardly reconcilable activities. Now you have a lot more players who can actively push in the market from both sides, from the crypto asset service provision side, but also from the traditional financial intermediation side. And at the same time, you have one European license regime. That means that competition is fostered. And I think we're breaking up in that sense this sort of cost to product innovation, a really, I think, very, let's say, a very, very bad period when it comes to market development in the EU that in the last couple of years was driven by who can do what where, rather than which product is actually best for customer demands. It was really only about big licensing play. Now we're moving forward. We're moving forward in a way in which, contrary to the US and contrary to a lot of Asian jurisdictions, regulation divides up or gives crypto asset service providers a distinct advantage over traditional intermediaries when it comes to certain slices of the product offering, and that's why Alireza has fortunately prepared the stage for me on that, because you're looking not only at whether banks or asset managers can only serve certain customers with regards to crypto asset or DLT settling issuances. You're not only talking about cross-selling opportunities maybe being limited for those players, but you're really talking about prudential capital effects where banks and asset managers right now are inhibited themselves maintaining large inventory in certain asset classes, or, for example, being hindered from effectively benefiting or making their customers benefit from yields generated from participation in proof-of-stake mechanisms, etc. So there are certain, without going into the regulatory details, which have been analyzed by others, there are certain bits of the pie, basically, that banks and asset managers right now are struggling to take up, and where crypto asset service providers really can see opportunities not only for competing, but also for integrating and for offering complementary services. So that means when you're looking at what opportunities for product innovations does MiCAR now give to us for the next couple of years? Well, there are the classical ones, right? Build outside existing infrastructure. We have heard about DeFi lending and advanced strategies, or more generally DeFi being outside of scope of MiCAR to a certain degree. you could look at DLT payment solutions as a separate sort of client vertical, offering services to clients on that front. And you could look, building around existing infrastructure more generally, maybe in a way that doesn't even have to do that much with crypto as a service provision in and of itself, the way that we did at One Trading. Again, maybe we're taking one step back, what does One Trading do? Well, we've built the first fully regulated, globally, the first fully regulated futures trading venue that operates on a 24/7 basis and is open to all customers, no matter the customer type, and offers products that settle in fiat or in crypto and can be collateralized by fiat or cryptocurrencies or other assets in that sense. Now, how does crypto matter to us? Well, in a world where DLT applications don't exist and there is no 24/7 settling assets for the majority of our clients, how do you compete with a centralized clearing structure that provides a natural monopoly for people to collateralize their derivative positions in one place because their assets are stuck there? Like, you're never going to compete and tell them to take some assets away, put them on your platform, collateralize positions on your platform, rather than have them all with the one clearer or the couple of clearers that they're using. Now, we needed to step away from the clearing infrastructure because that clearing infrastructure doesn't work for 24/7 trading, and we built a functional equivalent that is better suited to modern trading. And we needed crypto to enable that, and we needed DLT assets to enable that, and we're looking forward to more assets being effectively able to be moved on permissionless blockchains in the future, because those really drive the uptake of our exchange offering, right? So that's a very indirect thing that you can build with MiCAR now clearly categorizing certain assets and for the first time providing that uniform framework across the EU for those. But, truth be told, if you're doing one of those activities, right now still, there are better ways to build those than the EU, because we heard about it. You still have a closed EU framework on securities being natively issued on blockchains. You do have a problem with stablecoin adoption, given the strict requirements for those. And you do have issues of framework interaction. I mean, we talked about DeFi initially and the constraints that you're having analyzing whether your service falls into those categories. But I could also think of a thousand other problems that asset managers face when they're trying to integrate things like that. And on the other side, crypto native players face when they're trying to shape their product offering in a way that doesn't clash with AIFMD, for example, for alternative investment approaches. At the same time, I think we're really at an inflection point for offering complementary solutions to a lot of traditional players who are now approaching the space for the first time, being able to directly integrate crypto assets service provision into their offerings, because MiCAR enables them to do it to some degree, even fosters adoption of crypto asset services by players who have other licenses. There is, for example, a notification regime which makes that easier for certain players. But at the same time, they're facing those balance sheet restrictions, potential capital restrictions, maybe to some degree technological risk constraints when talking to their national competent authorities. And I think here we're really enabling complementary solutions that work different to what we've seen in the last couple of years, where basically you have a monolithic sort of traditional structure, and then you have a monolithic crypto as a service provider structure, and the only way in which they interact is they're offered within the same app, but that's it. Really breaking that up can add a lot of value. Can add a lot of value for the customers, we'll get to that in a second, but it can also, that's my second thesis, it can help crypto as a service providers scale into more complex asset management applications and benefit of a growing, also internationally consolidating system of DLT-based value transfer, replicating the success of European fintech in the payment sphere, now on a DLT assets basis. So basically, what we cannot change is that we don't know how much of the actual settlement layer in the end will be open or provisioned. that's not only a regulatory question, it's also not only a commercial question. That is factually also a question that everybody here hates to hear that lawyers still need to figure out. The problem here being that in order to enable globally open settlement layer, globally open settlement layer for a lot of assets outside the crypto asset moniker under MiCAR, requires that property law frameworks interact well globally. And that is something that a lot of people have spent a lot of time figuring out for securities at the beginning of the 20th century, like tens of years. And in the end, still securities markets have remained globally segmented. Now, this is something that will take time, and we cannot really control. But what you can control is, as a crypto asset service provider, positioning yourself in the midst of the customer offering, integrating on a modular basis with even a traditional financial intermediary holding a client relationship themselves, and solving their problems and at the same time upskilling in a way that positions you well for the event that those markets grow together globally. And the first mover advantages that we are now seeing, for example, in fiat on and off ramp are vanishing, and really creating network effects for not only custodying in the future Bitcoin and Ether and enabling native staking services for some of those assets, etc., but really also taking up then real world assets that move on chain, native issuances of equity, and other really interesting asset classes. So yeah, key takeaways for EU players, how to position for a global revolution really being the expansion of the DLT settlement layer to also comprise asset classes beyond your crypto assets under MiCAR. Embrace complexity. Well, the EU might not be the easiest starting point, but the EU is something that is a system that really fosters integration with other players and that really provides a solid basis for scaling a business. You don't have to do everything yourself. Make cooperation easy. Build your, we've heard about Tradias and Tangany. Build your business in a way that is modular, that allows traditional players to integrate certain slices, certain tranches of your business offering, make them separately auditable and separately scalable. What do I mean with scalable? Well, it's not enough that the product works. It's about product excellency, and it is about operational excellency. Again, we talked about two German players today that have built out Germany. We are talking about Asian players coming into the European Union. Both have different limitations. What I'm really advocating is that we're sitting down together and we're looking at how can we enable global partnerships in a way that operational excellency that many Asian and global players bring to the table arrive in the German regulated players, and that the German regulated players at the same time provide this sort of already existing modularity, transparency, and auditability to a plug-and-play B2B2C business offering. That was my presentation, and I hope you enjoyed it, and I hope we do have time for at least a question or two. Go ahead.
I just wondered, did you hear about the Modular efforts for creating a modular for the private law side of things, so ownership and acquisition between base and supports?
Yeah, and indeed the Modular principles, draft principles for those are incredibly powerful tool, right? So basically this is about not legal compatibility, but about law harmonization. So that means kind of the same way in which, again, at the beginning of the 20th century for securities, really like back then there was papers, right? We got stamps on their bags and were traded by moving them from paper boxes to paper boxes. How those securities were treated globally when it comes to, for example, untraceability of one of the interim owners or purchase sellers, etc. So really harmonizing what happens if something goes wrong. It's always about when something goes wrong. With DLT-based assets, the problem here really is that already which law is applicable can provide a lot of challenges because there is no physical location of the asset. So that is something that in conflicts of law settings plays an enormous role. Here we can't rely on it. How to overcome that? You can, for example, overcome that by uniform law that is applicable to those assets. I think the work that the working group has done is very strong and goes very deep. I don't know if our current geopolitical climate allows for harmonized solutions so much. So I would be very fond of adoption, more generally of those principles, but that remains to be seen whether that's viable.
Thanks, Mario. It was very, very useful.
Thanks so much.
Grateful for all these insights.